Hey guys, welcome to the Rachel Cruze Show. So we all know that interest rates just keep going up and the Fed keeps hiking them up to stop inflation or try to stop inflation, which we talked about in another recent episode. So for example, the Federal Reserve raised its target federal funds rate by 0.5 point on May of 2022. And by the time you're watching this video, they may have raised them even more. So we're gonna unpack the things that have the highest interest rates here in a minute on loans and debts that a lot of people take out. But first, let's talk about more of the impact of high interest. So people that think it's totally fine to have debt, they really should look at the rise in interest rates and think again, because interest rates continue to go up, which means you're going to end up paying so much more on the debt that you have. So we're gonna walk through some of these in more detail, but again, the main thing is to keep in mind is that you wanna quickly get out of debt as fast as possible. You wanna budget and be in control of your money so that you are the one controlling all of your money, not everyone else out there. And this is gonna give you way more stability as the economy continues to go up and down and we kind of experience all the craziness in the world. So here are 5 things with the highest interest rates right now. The first, mortgages. As of right now, the average interest rate on a $300,000 loan with 20% down payment and a 15-year fixed rate mortgage, which is what we recommend here at Ramsey, is 5.27% here in Tennessee. For a 30-year fixed rate, it's even higher at 6.36%. And again, this is all gonna vary depending on where you live, the amount of mortgage that you're taking on, the size of your down payment, all of that. But when it comes to, again, mortgage rates, they are going up and we're seeing the market soften because of it. Number 2, car loans. For most borrowers, APRs are starting at 3.59% for new vehicles, 3.79% for used, and 4.79% for refinances. So again, these change a lot over the past few months, but we just continue to see them go up and up and up. And mathematically, I would say car loans, they're the ones that hurt my heart the most because you are borrowing money for something that is going down in value. Now, obviously, the car market has been crazy, just like everything else, but no time in history does your car actually make money for you. So over time, as supply continues to come in and demand starts to lower, it's gonna go back to normal. So when you take out debt on something that is going in the long term, go down in value, it's not a good plan mathematically. Number 3 is student loans. As of right now, if you have taken out a loan after July 1st, 2022, the interest rate for direct subsidized and direct unsubsidized undergraduate loans is 4.99%. For direct unsubsidized loans at the graduate or professional level, the interest rate is 6.54%. For direct plus loans for parents and grad or professional students, the interest rate is 7.54%. And again, this is going to vary based on the type of loan that you take out, and all of these numbers are just crazy right now, which means you are going to pay thousands and thousands of dollars more for your degree in the long run versus if you pay it off quickly or you cash flow your degree. And there is a way to go to school debt-free today, and we talk about it a lot here at Ramsey, but it is possible. And if you have student loan debt, again, you want to pay it off as quickly as possible. So let's take a quick break so I can tell you about our sponsor. Are you a busy parent focused on family and faith? Well, what about finances? Times are tough, but there's a budget-friendly biblical solution to rising healthcare costs. It's through Christian Healthcare Ministries. They are caring, cost-effective, and Christian. To learn more, go to chministries.org/Rachel. Number 4, personal loans. This doesn't mean that you just borrow money from a friend. A personal loan is money that you borrow from a financial institution like a bank, credit union, or online lender. And right now, personal loan rates range from 4% to 36%. And again, the rates depend on the lender, on the borrower, and so many other factors. But this is why it is just not a good plan. It never is a good plan to go into debt, even for a personal loan. And number 5 are bonds. So the initial interest rate on a new Series 1 savings bonds is 9.62. So bonds is a place that you actually can put your money in and quote unquote invest, and that's the return you're going to make. So this is actually interest that you are earning. But over the long course of time, I still recommend avoiding bonds and actually investing in the market. Now, yes, the stock market is down, but when you are investing low, then interest rates go up and you're going to make more money on what you're investing in today. So in the long term, I will always recommend the stock market over bonds. So the bottom line, any kind of debt out there you want to avoid, and especially the fact that interest rates keep going up. Now, we didn't even touch on some other loans out there like payday lenders, things that have insane 90-day same as cash, insane interest rates. But these are the loans that a lot of people take out and they keep in their lives because it's normal. But mathematically, as you look to see, okay, what extra am I paying in interest because of debt, it again, not only takes you out financially, but there's something emotional too about owing someone something. So if you have debt, pay it off as quickly as possible. We recommend paying off the smallest debt first, using the debt snowball, cut back expenses, make more income, throw whatever you can at that smallest debt. And remember, interest rates are probably going to keep going up for the foreseeable future. So now is the time to take control of your money and create a life you love.